Investor Iron Pillar has successfully closed $129 million for the first ever growth stage fund, which is focused on investing in global cloud software companies which are from India. Now, Iron Pillar currently has nearly $500 million in assets under management, and this particular fund is part of Iron Pillar's Fund 2 series of funds. Joining me now to talk about this is Anand Prasanna, who is a managing partner at Iron Pillar. Anand, welcome to Startup Street and thank you very much for your time. If you could start by telling us where exactly you plan to deploy this latest $129 million that you've closed. I know you look at software companies primarily, but have you identified specific companies, and by when will this be fully deployed?
Thank you for having me at Startup Street. For this fund, we have actually already every year been tracking around 40 companies. So we have around 120 companies pipeline, and currently tracking that. Potentially we'll invest that in the next couple of years.
All right, so how soon will you be deploying it? I mean, you have 120 companies, surely you won't be putting money in all.
Yeah, no, we typically invest into 8 to 12 companies in a fund, and it'll take 2 years, sometimes even 2.5 years for us to invest.
All right, but how soon will you start writing these checks, given that you have companies identified, and what is the typical check size like for each investment that you make?
We've actually started writing a couple of checks already from this fund, and typical check sizes which we write are anything from 8 to 12 million initially, and we could go up to $20 million in a company.
Focus, like we've been talking about for Iron Pillar, has been SaaS and consumer tech very much. Why just those two? I mean, is there a reason behind that? And any specific themes within these two that look more promising to you from an investment point of view?
So this particular vehicle is fully focused on SaaS for global markets. Inside that, we invest into 4 areas: automation, security, dev tools, and also future of work and education. And in consumer tech, we typically like full stack businesses in consumer tech in areas like food, education, and even sometimes like B2B, B2C brands.
If you could tell us how the outlook is looking in this environment, are there any other exits which are lined up, or is it getting harder to do that?
Interestingly, and I want to thank our founders, we have some very good assets, and there is some good interest from other buyers to potentially acquire some of these assets at this point of time. There is also some IPOs which are getting lined up for the IPO market to open up and get exits there. So we expect significant amount of capital to be returned in the next 12 months itself from these avenues.
We know your portfolio companies. Any names you could share with us? Which are the ones where you're eyeing an exit? And what kind of returns on those investments?
Specifically, I wouldn't want to name companies because these things keep on changing in terms of opportunities. But in terms of returns, we can say that our vehicles are anything from 38% to 80% IRR. And in terms of multiples, they are anything from 3.1 to 4x. So we are hoping to kind of, in our first fund, for example, return full amount of their money by next year, which would be the 5th year of the fund.
The risk appetite of investors has certainly gone down. A lot of them are also looking inward at companies closer to home. In this environment, what has Iron Pillar's approach been, and how do you ensure that your investments are protected in this environment?
Look, there's 2 sides to this coin, right? SaaS built from India for the world have grown 5x in the last 5 years, and is a 12 billion revenue market from India. Now this, and I'm talking about Bain & Company's numbers here, not ours, they are expecting this 12 billion to go to 35 billion in the next 5 years, and that's a fundamental shift. Now, if a lot of global people are not investing, we being the first growth stage fund for this opportunity should find better opportunities to invest in at better valuations. That's one. Number 2, one of the key pillars of Iron Pillar's value add is ability to bring global investors alongside us. So capital as a serious area of value add for our portfolio companies is something we bring along. So we're not that worried about that piece.
Largely, with your portfolio of companies, you're happy with their performance, no tough decisions, having to be made there?
Tough decisions are always there, depending on what kind of tough decisions you make, right? But the fact is that you always take tough decisions in good or bad.
Given that we are seeing a lot of... given what we're seeing happening, with startups across the spectrum, whether it is restructuring, it's layoffs. Of course, some are impacted more than the others. But how has generally your portfolio performed?
Generally, the portfolio performed very, very well. In fact, it's proven by the fact that most of our portfolio companies have raised up rounds in the last 1 year. That being said, there are definitely startups. Every company have an opportunity to improve their operating metrics, cut the fat, etc. And the founders always make use of opportunities like this, what currently is there in the market, to create better operating environment, better operating synergies inside the businesses, and actually also take slices whenever it is needed.
All right, Anand, thank you very much for your time here and for sharing those thoughts. It's been a pleasure speaking with you. Thank you.